If you're constantly getting chopped up in the markets, this video is for you. Now, understanding where markets create balance is an area where heaviness of volume accumulates with multiple high volume nodes. You can see here I've enclosed it in the green block, and this is where the market has sustained its balance. Now, this is where heavy-handed market participants suck in the weak-handed participants to create that chop, and if you're forcing trades within areas like these, in the middle of those areas, generally around key points of control, you're going to experience whiplash and chop. This is where a lot of traders get beat up and they lose a lot in these areas. Instead, we want to understand where the heavy-handed market participants are actually active, and that is where the larger moves are expected to come from and the expected profit. So big heavy-handed market participants, they want to get active in areas where volume actually gets cut off of the heavy volume, meaning the extremes of balance, whether it's within the balance or outside the balance. This is where volume profiles like this one can give you more context into what's going on. So if I'm within the balance, I can play the extremes fairly comfortably with a little more information. Where prior volume has dropped off, where there's rejection, sure. But the second I start accepting outside of that large balance, in this case was yesterday pre-market, I want to understand that bam, this is the expansion where the strong-handed traders are expected to push prices higher. So I'm no longer trying to sell into this balance. Now I can get active on that expansion. So outside of balance, you have the liberty to look for that kind of continuation, and there's a higher probability that you're not going to get chopped up as much. Now inside those balances, that's where the knife comes out and you get these little paper cuts. So respect the balance, trade the breaks, trade within the extremes, but don't trade the heaviness of volume that encloses weak-handed traders and traps retail traders that trade around massive areas of volume like the point of control. So you want to mark out where these key extremes are. Volume profile is a fantastic tool. You can use composite profiles like you see here on the screen. On the right hand side, the gray one is the 400-day. Right beside it, the colorful composite is the weekly. And you can create your guidelines using just these two simple profiles so you can escape those paper cuts. Now, if you want to learn more about this, more about trading balances and imbalances, we do have a PDF down below in the description you guys can get your hands on for free.